It's Tuesday, June 11th, 2019, and I'd like to welcome you to Maximizing the Bottom Line for Medical Practices, our latest addition to the ongoing Business Solution Partners webinar series. Today, we're targeting our message to the burgeoning subvertical of the healthcare industry, medical group practices, providing today's audience with compelling examples of profit maximization through technology and operational transformation. We've got a great lineup of speakers and a packed agenda for you today, but before we begin, let's introduce our company and today's webinar team. This webinar is brought to you by Business Solution Partners. We're purveyors of cloud-based business and financial management solutions for modern enterprise. We're an Adaptive Insights Gold partner and an Oracle NetSuite solution provider. We hold certifications with many other SaaS solutions for finance, sales, operations, marketing, and more. We're proud to announce that this year we received both NetSuite's 2019 5-Star Award and the Partner of the Year Award from AvidXchange. We represent a wide variety of software and process solutions supported by training to ensure that your company succeeds in the modern business environment. Business Solution Partners is the CFO's trusted resource. Our 30-year history of providing strategic, financial, and operational guidance and technology solutions to a growing customer base has been very fruitful. In addition to the 2019 awards mentioned on the last slide, we're proud members of the Inc. 5000 for 6 consecutive years, have been named a top 100 value-added reseller by Accounting Today magazine, and are actively involved with SaaS user groups, building communities for NetSuite, HubSpot, and Adaptive Insights across the country. My name is Craig Cook. I'm the Chief Marketing Officer for Business Solution Partners, and together here with my team, David Smooha, Eric Zimmerman, Wing Chan, and Michelle Cronley, we would like to welcome you to our live webinar event. All right, finally, before I hand the baton over to our first speaker, David Smooha, let's take a quick look at our agenda. Today, we seek to outline how medical practices can maximize profits by addressing operational changes and through the transformation of financial operations. We're going to focus on tips to measure the accuracy of the forecast, identify key dimensions for budgeting and reporting, discuss allocation and scenario planning, as well as the importance of dashboarding, and examine how your business can leverage technology to automate. We'll then hand the baton over to Wing Chan for a brief introduction of Adaptive Insights, followed by a technology showcase featuring Eric Zimmerman. Finally, at the end of the session, we will have an open Q&A and an opportunity to further engage your speakers. Excellent. Thanks for bearing with us. We're ready to get started. It's my pleasure to introduce your first speaker today. David Smooha is the Chief Executive Officer of Business Solution Partners and has spent the last 30 years consulting with companies on their strategic and financial operations. Holding the credentials of a certified public accountant, David has become the trusted advisor to many C-level executives who seek his guidance and the skills of the Business Solution Partners team. As we dive deep into financially transformative strategies for medical practices, I don't believe you could have a better guide. Please welcome your first speaker, David Smooha.
Thank you, Craig. And thank you, everyone, for joining today. I'm going to take a couple of minutes and cover a couple of topics this morning. First being how you can maximize your profitability using the finance department. So there are a lot of other ways that you can maximize profitability in a medical practice, but I'm going to focus on the things related to the finance operations. There's 6 items that I've identified here today. First is being able to measure your forecast accurately. Finding the mechanisms to be able to measure your forecast so that you have all the variables in place and understand what all those variables are for your organization. Second is being able to report and budget on your information using different dimensions within your organization, and understanding what those different dimensions are and the variations between those dimensions. Third, being able to allocate costs in a variety of different ways so that you can see the true cost by department or by provider in your organization. Fourth, scenario planning. Being able to identify and look at different scenarios in your organization or potential opportunities in your organization to see how those might result with regard to your profitability. Fifth, dashboarding, providing dashboards to the relevant team members in your organization that are timely and accurate to give them key metrics that they can perform by and manage their departments or organization by. And lastly, making sure you're leveraging the technology to automate all of these areas. So first I'm going to cover a little bit about measuring the accuracy of your forecast. What we often find is that companies don't necessarily know the information about how their forecasts, the impact of all the items in their forecast, and don't really understand the root causes of the variances. So whereas they may project a certain write-off percentage, and maybe they achieve those write-off percentages, they don't necessarily know whether all the variables are being addressed in that process. I have a couple of examples to show you how you can look at this. First, we're going to take a look at how pair shifts might affect your forecast, fee changes might affect your forecast, and your payer mix might affect your forecast. The first example, or the first sample here, or exhibit here, would really show you very flat procedure code review. If your fee schedule provides for $1,000 per visit, encounter, whatever it may be, you could see here, depending on the provider, Medicaid, you might actually experience an 85% write-off percentage, whereas for a PPO, you may only experience a 25% write-off percentage. In sum total, if you merely looked at this in this regard, you would look at a 59% write-off percentage for your payers. If you merely use that number, you might be incorrect, because there are other variables that affect that, as we well know. The first being, what is the volume of each of these payers? In this scenario, you could see I've modified the volume, but kept the same percentages and the same fee schedules. By simply modifying the volume, you could see here that the overall organization has gone to 69% write-off percentage from a 59% write-off percentage. If you use the 59% write-off percentage in your forecasts, you would have had your revenues would have been grossly overstated. Now, take a look at another simple change. If we simply change our gross charges and increase our fee schedule to $1,080 from $1,000, you'll see here that whereas maybe Medicaid and Medicare may not be affected, the PPO and HMO could be affected. And even though you are actually earning more per visit and your revenues are actually increasing, your net patient revenue is actually increasing in this scenario, your write-off percentage has increased to 71%. And so if you merely use your write-off percentages, if you merely use the write-off percentage as the way that you tracked your forecasts, you would again experience an error in your forecast. And then lastly, we'll take a look at changing the payer mix. So here, what I've done is actually changed the mix of adding more Medicaid and less Medicare, and similarly more HMO and less PPO and transactions within our volume. And you'll see here again, yet again, the write-off percentage has increased to 75%. So these 3-4 variables that you have here could significantly affect them. And being able to feather out the differences between what you anticipated happening to what actually happened and where those changes happened would help you identify what you need to focus on within your forecasting models. Second area that I want to cover is reporting and budgeting. A key area for you to be able to pay close attention to is not just the overall gross profitability of the organization, but focusing on the profitability of the organization by location, by procedures, by providers, by departments, or maybe some other dimensions that I may not have identified here for your organization. What do you need to be able to track this information so that you can report on it? Well, you absolutely need a strong chart of accounts. As all of us accountants know, chart of accounts is the key and the cornerstone to being able to really track your expenses and define the detail within which you're tracking those expenses. Being able to also create timely profit and loss statements by dimension and having the ability to compare locations, procedures, providers, or departments are another mechanism that's used to be able to track information by dimensions. Doing budgets annually, it's often we find companies that do not do budgets annually and are not able to measure against their actual results against budgets and anticipated results, can't maximize their profitability in their organization. We also suggest not only to create those budgets, but to reforecast those budgets regularly. So what you may have thought would happen at the beginning of the year likely changes, certainly after a quarter or a half-year event, but we recommend looking at reforecasting your information at a minimum on a quarterly basis, if not a monthly basis. And also, when you perform those forecasts, continue to make sure that you're forecasting out over a 12-month period. Forecasting out only through the current period and not through the 12 months might find yourself falling short on key changes that might happen early on in the following year. And so by being able to begin to identify those as the company goes through the course of the year and seeing what those items may be into the future period is a key variable for you to pay some attention to. And then finally, consistently and timely comparing those actuals to budgets. Doing it monthly, in some organizations they even do it weekly, but doing those monthly and doing them timely as early on at the end after the month-end process as you can, because the data gets stale quickly and you can't react to that quickly. Using those dimensions and using these different methods will really help you fine-tune your reporting and dimensionalize and providing you information across all the different dimensions. Next, I'll talk a little bit about allocations and how allocations can impact the profitability of your organization. It's not merely enough to simply provide a P&L to providers without including the overhead associated costs or the shared costs that may be associated with running a practice. Those costs, of course, can include rent, supplies, personnel, utilities, or maintenance costs. And making sure that you're distributing those costs fairly amongst the providers. When we look at the different ways that you could share these costs from the providers, those could be could come from a number of different ways. Those could be through allocating costs by physician, based on how the physician uses those costs. Could be by simply looking at the providers. Could be by the number of visits or the office space that the provider uses, as well as the days or the hours the individual works. Scenario planning is another area where you can identify potential cost savings or revenue generation through the process of looking at the effects of different things that might change in your practice. That could be simply by adding providers, by using different procedure codes, or identifying additional service lines that you may be able to provide. That could also be through identifying changes in your third-party providers, adding providers, deleting providers in your mix. How might technology expenditures impact your organization? being that if you spend money on technology, what cost savings might be incurred, what additional revenue might be gained by implementing that technology. Considering patient demographics. If the patient demographics may be changing in your area, or you may be able to attract a different type of patient, how will that impact your third-party payers, providers, revenue schedules? Looking at the economy and the trends going on in the economy. Although we all believe that medical practices are fairly economically resilient, there are changes that obviously do affect medical practices, some more than others, but the economy can affect the medical practice. And being able to create scenarios for different trends in the economy is something that will allow you to anticipate changes that you need to make in your medical practice in advance and continue to maintain the profitability. And lastly, you may consider either outsourcing staffing or billing, or maybe if you're already outsourcing staffing and billing, consider the scenario of bringing it back into your organization and seeing how that might affect your business, the revenue as well as the costs associated with running those teams. Dashboarding. Dashboarding is an essential part of really not only taking the budget and data and the forecast data and actual data within the organization to the key stakeholders in the business, but pushing some of that information out in a consumable way to key individuals in the company, whether that might be to a provider or that might be to a service line individual. Managing dashboards and putting in front of those individuals different statistics that might be relevant for their job and key metrics of what they want to attain or should attain. That could be for a physician, could be the number of scans they've done, the number of procedures they've done, the number of therapy sessions they've done on a given day, comparing that to the budgets or the forecasts so they can identify whether they've met the goals or not met their goals. That could be to a switchboard operator to how many phone calls that they're answering, or to an individual nurse on how many shots they might be providing. Obviously, we don't want to encourage that, but of course, being able to understand that is something that we want to be able to provide to each individual. Also looking at other variables related to potentially costs. What does it cost for the facility per encounter? Or what are the rental costs per square foot? Or the revenue per day for a given provider, a given service code? Or even the supplies that it costs for a particular procedure. And then lastly, I want to recommend that you pay a close attention to the technology that you're using. Technology is a great way of being able to maximize profitability in your organization. Using technology and using technology well allows you to cut costs, maximize revenue. Some of the key areas of technology that's used in medical practices and by the finance team include your billing systems, includes your ERP systems, and being able to capture the revenues and costs at the levels of detail that you would like to. The reporting systems that you may have, that includes being able to provide that data timely and accurately to the individuals that need that information. The budgeting and forecasting systems that you may implement to help you handle some of the items we discussed earlier today, looking at budgets, preparing forecasts and reforecasts, comparing those to actual, and then finally the dashboards and the KPIs that you might identify for yourself and your organization to make sure that you're managing to a forecast the actual results in something that could be usable by the individual that's looking at the dashboard. So to summarize, there's a number of items that we can look at for measuring the bottom line in an organization and maximizing that. That again includes looking at the accuracy of your forecast and maximizing and understanding the different variables within the forecast, budgeting and reporting, and being able to dimensionalize your data by provider, by department, cost center, allocating your expenses in a way that makes sense for your organization so everyone can see the true cost of their department or the running of a particular provider, physician or provider. Scenario planning and looking at different scenarios within the company that might impact your profitability. Dashboarding and pushing information to the users of the company so that they can see how they're performing on a timely basis, either day to day or monthly. And then finally, putting together the right technology stack for your organization so that you can perform all of these attributes. Today, we're going to be looking at Adaptive Insights. Adaptive Insights is a solution that allows you to handle many of the things that we spoke about today. So I'm going to pass the baton back over to Craig here and introduce our next speaker.
All right, David, thanks so much. Even I learned a lot today from this presentation, and I'm really looking forward to diving in a little bit deeper about Adaptive Insights with Wing. So let's introduce your next speaker. Wing is our Adaptive Insights Senior Account Executive. He is a really dedicated salesperson and a great member of our team who, makes it his business to help business owners find the right technology stack to meet their needs. I've been working with Wing for a long time, and I'm very excited to have him introduce Adaptive, the business planning cloud, to you. And we're going to get some insights from him right now.
Thanks, Craig. Yeah, let me take the next 5 minutes to tell you about a solution popular with healthcare clients for automating their processes. Not everyone realizes this, but active planning is really a continuous, ongoing process. If, for example, we select modeling as a first step, then once the annual budget is completed, you're monitoring progress versus plan, and of course, reporting on actual results and analyzing performance throughout the process, then replanning the process to move forward. Successful firms leverage an ongoing cycle for continuous 360-degree view of your company's past, present, and future for quick decision-making and agile course correction. In addition, planning is no longer just a finance process. The most successful organizations involve business stakeholders in not only finance, but also sales, marketing, the executive team, operations, and HR in the entire process. Thus, viable solutions for automating your processes must be able to do two important things. One, handle all facets of a continuous planning process. Two, support planning across stakeholders in not only finance, but all departments in your organization. BEP Healthcare is one organization that has mastered the art of active planning. Here's the situation. They deliver quality, compassionate healthcare to those in need. Their organization has been built through opening new locations and acquisitions. Their prior challenges, they're using Excel-based budgeting, which failed to meet the needs of their fast-growing healthcare organization. And their financial system didn't support their complicated financial reporting needs. The benefits after using Adaptive Insights were that non-financial managers can easily navigate Adaptive Insights and leverage the system for proactive decision-making. Finance employees can easily build acquisition models suited for the healthcare industry and quickly create financial statements. And they're able to pull in data from all of their business systems for a consolidated view of their organization. Here's a small sample of other healthcare clients leveraging the cloud-based Adaptive Insights solution for automation. As you can see, they're across multiple sectors of the healthcare industry. In addition, Adaptive is popular not only with the healthcare industry, but across many industries. In fact, over 4,000 clients benefit from the solution. Adaptive Insights is part of Workday, but can work with data from any system. It's consistently regarded as a leader by multiple analysts, and it's used by organizations in not only North America, but in over 50 countries. Adaptive's ability to report, budget, and analyze on key dimensions makes it a preferred solution of healthcare providers. Increase your bottom line by tracking RVU by physician, charge per patient visit, or facility cost per encounter. Create an income statement by location, by physician, or by specialty. That's a quick overview of one of the systems that we assist clients in leveraging for automation. Now that you've heard about it, you probably want to see it in action.
All right, that means, Wing, that it's my job to move us into our next session, our technology showcase. I'd like to introduce our principal solution consultant from Adaptive Insights, who's going to take us through Adaptive and really showcase what the technology can offer. Eric Zimmerman supports the sales enterprise team in leading demonstrations, same as he's going to do here with us today. He's really good at it too. He enjoys forming customer relationships that extend well beyond the sales cycle, and he's really been in it for the long haul with Adaptive to make the customer experience the best that it can be. So it's time for our technology showcase, and I'm going to pass the baton over to Eric, who's going to take control and present us with a demo.
Excellent. I really appreciate that, Craig and David and Wing. Thank you for setting this up. What I'm going to do is take you through, give me a second to share my screen. A lot of the things that were shared previously on this webinar, I'm going to demonstrate how Adaptive enables all healthcare providers that ability to maximize the profitability through a lot of the scenarios that were presented earlier. So breaking down your data by dimensionality, seeing that data in real time, being able to look at your actuals to your budget variances and make course corrections. In one of the key topics was dashboards and the ability to visualize the data set. And also bring in the data from your third parties and where your other data points to drive accuracy in the forecast, also to be there from a reporting perspective. So I'm going to take, there's lots to cover. In the next approximately 30 minutes, what I'm going to do is have a couple of sections. The first section I'll talk about is dashboards, the underlying technology with Adaptive, and kind of set up how Adaptive you would navigate around Adaptive. And then we'll go into scenario planning and look at how the model can quickly create a scenario, how you can adjust that scenario, whether it be in the procedures, the assumptions that are driving the procedures. We'll look at reporting. And then we'll talk briefly on integrations, because it's going to be something that is very important to most all of our customers. And the fact that you don't have to contract out with a third-party integration solution is a key differentiator. Likewise, having your dashboards and your business intelligence platform on that same data set is also a differentiator from others in this space. So what you have here, and what I'm showing on the screen, is what we call discovery. Having the data, all of the data that you're seeing here, from the inpatients to the net profit margin, inpatients per day, all of this is being brought up from a single database that's sitting behind the data. No longer do you need to know and have an IT degree or a database administrator advanced degree to work with the data set. As you bring in the data, you're able to create charts and graphs very, very quickly, and I'll demonstrate that in just a second. But I wanted to talk about how these charts are very interactive. And what do I mean by interactive charts? Based on the dimensionality that exists in the data, whether it's budget data or actual data, or in this case here, there's a combination of the two. Here's actual data as a bar chart, and then the line chart is our target or our budget data. So actual and budget, you can bring those in on the same chart. But then the ability to drill in, if somebody asks the questions, well, what are the procedures that are making these inpatient days? Simply selecting the procedure, that you can get to that next level of granularity and seeing what are the impactful procedures. Then if you wanted to see, well, what department or what level in the organization, you're able to explore and drill down in. Because this is on the web and it is browser agnostic, if you're looking at this with an iPad or a Surface or any tablet or even your smartphone, because it's HTML5, it will render on any device. So these types of dashboards really can fit whatever a device is being looked at. Now, you can create these dashboards to represent data that's important to a specific group of individuals, and then share that with them. Just like a bank statement, where you have a username and password where it shows you just your banking information, Adaptive is set up in that same way. If you are an organization with lots of clinics and you have information that you want to distribute out to all of your clinics, based on a username and password, that whoever has access to that clinic will only see that data. And that's a big key, where from an administration perspective, you're setting up maybe one dashboard or a group of dashboards. But then as each individual person accesses that information, it's tailored to their specific roles and permission. And that's the advantage on a cloud solution to do that quickly and easily. So as new clinics come on board or as some move away, you can quickly and easily create dashboards that only they have access to. Likewise, creating these types of dashboards, if they're not easy to create, then nobody's going to use them and you're going to go back to the old ways of Excel. So what I wanted to do is show you how to create a dashboard. So going into creation mode, if you will, I'm going to grab, let's maybe do a pie chart. And maybe what we're going to do is look at our counts by procedure type. So maybe I look at my procedures and drag that on. Once again, everything within Adaptive is drag and drop. There isn't this notion of coding or needing to have an advanced SQL knowledge or MDX coding or some type of advanced database programming language. Being able to drag and drop is going to be essential. Now, this pie chart doesn't really tell me much because it's looking at just the total count. Now, if I come over to the data set and now I want to break this down by the dimension, and this was mentioned earlier, is to have good dimensionality so that you can see the data by various cuts of the data. So now what I did is just moved the chart to now reflect a dimension that we have called procedure. So now what you see is that the majority, the 92% of our procedure counts is done in imaging, where we have 8% in surgical. This is how charts are created. It's not like I have any demo magic that I'm showing today. Being able to quickly drag and drop charts, and then when you're done with it, you just hit done. And now you are able to drill in. If there's any additional dimensionality, you don't have to code that in. It just assumes, the solution assumes the dimensionality is still there. And if you want to now explore that data and drill down into the source of the data, you're able to just select explore the data, and it will drill down in on the individual. So if you wanted to drill down in, or if you wanted to go directly into the procedures part of the model, you could click on the procedure sheet of the model to get any level of granularity or dimensionality that you want. So in this case here, I'm looking at the knee for my surgical team, and seeing how many procedure counts I have. So once again, the dashboards are a great way to visualize the data, but unlike other solutions where you'd have to copy your data and move it over into a dashboard, Adaptive, this dashboard sits on top of that same data set that you might have. So now what I want to do is go through and show kind of the underpinnings of Adaptive. And really what makes Adaptive very easy for finance and non-finance alike to utilize it. Number one, because it's a cloud-based application, maintenance is very easy and everybody's on the same version of the software. It's a true multi-tenant cloud solution. But it also was created by a CFO. It wasn't created by a team of engineers who thought something would be cool. It was created by a CFO who had the similar problems that most finance organizations have, and that is to create scenario analysis, to be able to get timely and accurate information, and also create what-if scenarios that allow for the ability to run different scenarios and different models very quickly and easily. And the way that we do that, first of all, most solutions that I created in 20 years being in finance, and what I've looked at other customers, regardless of industry, when you're working with a model, typically the model starts with assumptions. Now, this might be a tab in a workbook called a control panel or an assumptions tab, and these are really the true levers of any organization. And in healthcare, a lot of the levers look like payer mixes or payer assumptions. You might have some specific corporate metrics, RVU. You might have a look at your workforce or your personnel assumptions. So what I'm going to do is just open a few of these tabs, and since I'm in a browser, I'm just essentially opening tabs up at the top. So let's take a look at payer assumptions, because this was demonstrated earlier as a couple of ways to model and to look at sensitivity analysis to the key drivers of your organization. So in this example here, I've got several different assumptions working in this same assumptions tab. We at Adaptive do not care what you have over here on the left-hand side. So if you're looking at this list of inpatients, you're thinking, well, I don't do any of these. It doesn't matter. Whatever your specific healthcare needs are, you can create the accounts that would house the assumptions. Likewise with your payer. Now, we have some best practices working in healthcare for so many years of how others would work through a model. But in this case here, I've got a list of payors. In this case, I've got Blue Cross, Medicaid, and Medicare. And then if I look at the level of dimensionality, if I come down here, I can actually influence the mix of the payors per procedure. So in this case here, if I looked at ultrasound, I've got a different mix. Now in this example, I've got kind of a consistent mix across my procedures, but that's not limiting. You can create this off of actual information. So if you want this, instead of just being a hard-coded 10%, for instance, if you wanted to have it reference history, so if you're bringing this kind of payer mix from a database that you're wanting to seed Adaptive with, you can have that seeded from an actual perspective, and then this would then be dynamic as new actuals come in. It would then adjust your payer mix accordingly. But this is an example of an assumption sheet where you've got you kind of price per, it could be cost per, and then in this case, I've got my payer mix assumptions. You might also have personnel assumptions. In this case here, once again, we don't care what's over here on the left-hand side. You can get as granular as you want. You can be as high level as you want. There's lots of flexibility here. Very easy to create these types of assumption sheets. For instance, if I wanted to, if I have a shift premium, or if I want to look at my nurses or my specialty care. Also, a lot of our customers will actually create tax rates in the states that they do business. Lots of healthcare spans multiple states, and maybe you want to look at your rates. Maybe there's a minimum wage impact to your wages, and you want to model that out per state. Then you can create assumptions that break this down by state. So really, the sky's the limit when it comes to healthcare. I know that's a broad brushstroke, and many of you might look at this this model here and say, "Well, we don't really operate like that." Well, that's okay. Adaptive is very flexible in creating models that fit the needs of your own organization. So we've taken a couple looks at some assumptions. These assumptions, just like it does in Excel, those control panel tabs will then feed calculations. Now, the heart of adaptive is our sheets, and so we have different ways to plan. So if you want to plan using more tabular, if you want multi-dimensional planning, or if you want to stick to kind of the traditional accounts on the left, time across the top expense planning, that's what we have here. And so what I'll do is I'll open up a couple of these and talk through them. But if you wanted to, let's say, have an expense sheet where you're gathering the expenses, whether it's by vendor or any level of dimensionality, you can create your expense sheets. And once again, it looks like accounts on the left, time across the top. Now, a couple of key points that I wanted to share here in this stage is showing you that from my perspective, I'm an administrator in this model, and I'm able to see this by any level of granularity that I have access to. Well, let's say you're responsible just for the imaging department of a specific hospital. When you come into this exact same template, you would only see what is meaningful for the imaging department. So if there's accounts that are not meaningful, you won't see that. And so then it's really tailored to the individual user as they come in to see what their expenses are. So what I'm seeing is everything rolled up at the hospital level, but if I wanted to navigate down to the imaging department, it is literally as easy as clicking on imaging department. And then this sheet will render all of the important information for the imaging department. Likewise, there's a little drop-down menu right above this, and we talked about various scenario planning. In adaptive, you can have as many scenarios as you want. You don't have to archive scenarios like others will make you, and we don't charge you for space. So those are some key considerations. You can create as many what-if scenarios as you want, and they act independently. So if I wanted to look at a what-if scenario where I'm adding procedures and I'm going to compare it to the budget, or if I want to look at my budget and compare it to actuals, or any combination of those, you have the ability to. And so in this case here, anywhere that you see white, you're able to create data and have data impactful. You can have levels, I guess, of further dimensionality. So in this case here, if you wanted to create different dimensions or different levels of data in the budget. So in this case here, you might want to have vendors and talk about which vendors are you spending for your medical supplies. You can create that dimensionality within the sheet like you see here with 6 different dimensions that you can expand out to. Once these templates are filled out, you don't have to send Excel files out to your various organizations and collect them. It is an instant amalgamation of data. It's instantly rolled up. So if I wanted to see the important information at the hospital level, once again, all I'd have to do is select the hospital and it'll roll it up instantly. There is no batching in adaptive. So if I make an adjustment or a change, I will instantly see it on both the report and the dashboard. And that's what I'm going to go to next, is go to multidimensional planning. I'm going to make an adjustment to a procedure count, and then I'll go to reports and dashboards and see that impact immediately. So in this case here, I just transitioned over to the inpatient revenue by procedure. I had it already pulled up, but you could get to it here in the menu as well. In this case here, I'm looking at my imaging department and looking at the specific ultrasound procedure. Now, because this is true multidimensional planning, if I wanted to look at all of the inpatient counts for all of my imaging departments, all I would have to do is drag that procedure over onto the imaging department. And what it would do now is show me all of the various counts by the dimensionality that exists in my multidimensional cube. So in this case here, what I have are my ultrasounds count, maybe in March. I want to put a huge number here just to make it obvious, but this might be an example where you purchased a new ultrasound machine, or you're going to hire several new ultrasound techs so you can handle more inpatient counts. In this case here, I'm just going to put a very large number so it's very obvious in all of the areas where I'm going to go show next. Because I'm doing this change in the budget, all I have to do now is save it. Now that it's saved, I don't have to batch anything. If I come back to my dashboard and just refresh my browser, you will see instantly you will see that very large number be very obvious in all of my charts. Here's that big, huge inpatient days, obviously. But down in here in my chart, I've got 1 million procedures, a corresponding revenue, and then obviously my pie chart is heavily weighted now to that imaging department or imaging count. Likewise, if I go to a report, which is in the web, and I come and once again refresh the browser here, what it would do is show me all of the impacts. There's that 1 million that I just put in my count, but because my gross patient revenue, I've got all of the ancillary costs and revenues for that specific count has been adjusted. Now, if I come back to this procedure and I want to go back to the default view and show you kind of a gross to net patient revenue, including any allowances and write-offs, you'll see in my March count, got a huge count, but all of the gross patient allowances, write-offs, etc., have been adjusted. And that's really, on an earlier discussion, is the importance of having this ability to run different scenarios and to see the impact quickly. So if there's a question of, well, what if we purchase this new machine, or what if we open this type of clinic, being able to go ahead and model that out quickly and see the impact based on the model that exists is going to be a key component of getting accurately and timely data. So what I just did is walked you through assumptions. I walked you through planning, both from a kind of a typical plan where you've got expense plans with some dimensionality. Here is multidimensional planning with the dimensions listed above here. But then if you wanted to plan your headcount or your personnel, maybe you want to have your personnel by name, or maybe it's by position. We see this quite often. There might be a subset that's by name. In this case here, I've got a group that's by name and their salary pay rates, their start date, end dates, and then any applicable information. In this case, every one of these columns that you see are configured to meet the needs of your own individual organization. So you're not stuck in a framework that we're telling you that you have to be stuck in. In this case here, whatever the columns that you want, you can add them after if you need to. The notion of technical concrete that exists in a lot of other solutions doesn't exist in adaptive, where if you wanted to add a column later on, you could quickly add a column. If you wanted that column to drive a different aspect of the model, you could do that as well. What I'm going to do is transition over to another model, another healthcare model, and talk about different ways of looking at general and different staffing sheets. So what I'm doing is opening up different staffing models. And so if I come here to maybe a specialized model, you can see that the columns are different here. In this case here, we've got step functions for their salaries. So based on their start date, and maybe there's a step date that takes them from step, in this case here, maybe a grade 7 to a grade 8. All of the applicable assumptions would then raise this person's salary based on that next grade level. If you wanted to plan by just have your staff and your model be driven off of bed count. In this case here, I've got a model where it's based on bed counts and the number of nursing hours per patient day, and have it all driven off of my bed count. So I'm not doing it by person. It's more by type of individual or type or role that you have. Likewise, if I wanted to now plan once again by name, and maybe there's some contractors that we have, or we're contracting our specific physician or whatnot. This is another example of workforce planning, which is going to be a key component in most healthcare organizations. That's going to be the largest expense for the most part. And so what I did is just gave different flavors of what we've seen our customers do. In this case here, this is the shift differentiation. And how many shifts are they going to have on just a normal shift or evening, nights, and weekend shift? And then based on that, you'd have a shift differential assumption. So this is a way to really hone in and get more accurate in the workforce plan that then would roll up to your P&L or statement of operations. And that's one of the key components. Having an integrated solution like Adaptive, you can have all of these sub-schedules that are laying out the different parts of your business, but then they can all roll up to an income statement. So all of these different areas of the model are now rolling up to the income statement. So in this case here, I'm rolling up all of those patient counts, and you can see that large patient number has impacted the P&L, and I've left it there on purpose to kind of highlight this impact. So it is integrated. And what do I mean by integration? If I wanted to explore that data and see why I have that huge outlier, just by right-clicking, I can link into that multidimensional cube and see what that $1 million or 1 million value is. Just simply selecting and seeing the integration nature, I can go back into that million. And if I wanted to further explore that and see who made the change and the time and date stamp, we have a full audit trail. So not only is this an integrated model, but it also shows you who made the change. And you can see that I've done various scenarios here, and it's time and date stamped all of those changes of what I've made in that patient or the procedure count, I should say. So it is a fully integrated solution. You can drill anywhere and drill on any one of these areas of the business, whether it's here in a kind of a template where you're seeing your actuals in green and the plan going forward. If I wanted to now navigate to a forecast where I've got 3 additional months of actuals and 9 months of plan, just setting up the versioning. And now January, February, March, and Q1 is now adjusted and bring in actuals, and the rest is planned. So being able to create these scenarios quickly, being able to report on them quickly is going to be paramount. And I showed you one of the reports, but you can have as many of these reports as you want. We have our own section with web-based reporting. So if you wanted to create different comparison reports, or if you wanted to look at your personnel report, look at my FTE analysis by position, you can create a library of reports using drag and drop functionality, just like I did earlier. To create the dashboards, all I have to do is come in. This is like a giant pivot table on steroids, where all of your, based on your permission, all of that is at your disposal. So if I wanted to look at actuals and budget and compare them, it is literally drag and drop. And if I wanted to come in here and do my differences, I can grab a difference. And then if I wanted to maybe change this to variance, I can easily change the column headings just with a right click. If I wanted to bring in my time span, maybe I wanted to compare my actuals and how things are going with my fiscal years, I can bring fiscal years in. If I wanted to do it by quarter or by month or by day or by week, depending on the granularity of your time series, you can bring that granularity in as well. And then maybe we want to look at my accounts. Now we talk about general ledger accounts, but you can also have metric accounts. You can have different Cuban counts. So if I wanted to look at my inpatient revenue by procedure, and I'm going to compare it 2019 to 20 and the variances, I can do that and run the report. So in a matter of dragging and dropping, I can go ahead and look at all of this information at the highest level, or I can drill down in once again on the payer mix and look at how it is comparing actuals to budget for 2019 and my budget. So that's a way of creating a drag and drop report where you've got web-based report. And in the next 2 minutes, what I wanted to do is show you how to do that using Excel, because a lot of times Excel is a warm blanket for most finance groups. So what I'm doing is transitioning into Excel. So this is an Excel sheet. I think this is Excel 365. And what I'm showing you here is a model where I've got some history. And maybe what I want to do is bring in my taxes and other expenses. So I'm coming here into my operating expenses. I'm grabbing my taxes and other expenses, dragging it in, and refreshing the sheet. What it's going to do is grab the data, bring it into grab the data from Adaptive and bring it into Excel. All of this is live linked data. So if I wanted to drill back into transactions and see what in the world was this 2.7 million, I could click on Explore the Cell. It would open up the browser. I would be able to drill into transaction level. And once again, being in Excel, grabbing into the browser, and then being able to drill into transactions, I can do that very quickly and easily. So in that case here, I wanted to go and explore why in the world was there a $2.6 million. I go into the transactions, and there it is. Now this is display purpose. We know that no accountant would ever fat finger a meal like that. But the ability to be in Excel, drill into the number, and see the impact. Now, if I wanted to do this exact same file, maybe I have some metrics, I've got department P&Ls, etc. I want to now do this for April. I just simply swing the report book date to that next month and refresh all these sheets at once. So in this case here, what I've done is updated. What you'll see is the timing here will go from March to April, including all of the calendar items and any of the templates that I have here. I've got now an April working budget and actual comparison in Excel. And then we take that a step further and say, okay, you might want it in Excel, but we know that many companies want to now push that information into PowerPoint. We have a one-button refresh, if you will, that takes what was once a March report book, will adjust it to April, including any of the charts, would be able to display your April data now quickly, easily, and seamlessly. So this idea of you create your model in Adaptive, you create your assumptions, you create whatever reporting package that you need, and because it's all pulling off of that single database, you have real-time data that's up to date as of the last time you hit refresh, and you are able to see that information across multiple platforms. If it's business intelligent platform with our discovery dashboards, web-based reporting, and then I left off here on Excel-based reporting as well. That's all linked to that same data. So with that, that's how finance organizations leveraging Adaptive can help to drive profitability, can help drive data accuracy. And with that, I will stop my share, but stay on for question and answer.
All right, Eric, thank you so much for that great demo. Again, I've learned from David today. I've learned from Eric today. I hope our audience has learned today as well. And we are going to open up the floor to some Q&A. At this time, if you've got questions, please find the Zoom interface, the Q&A panel, type them in. We're going to address them. I do have a couple that came in throughout the conversation. So I'm going to read them off, and then maybe I'll ask one of our panelists to answer the question. The first one up is from California. Jim is asking, we're currently using NetSuite for our ERP system, and we are using, it looks like ADP for payroll. Does Adaptive Insights integrate with these systems? I'm going to throw this to talk about integration.
Yeah, those are great questions, and often questions that we get quite often. But the short answer is yes. Adaptive Insights can integrate data from you can certainly bring in data from your NetSuite for financial data, as well as bring in typically labor and headcount data from ADP or any other outsourced payroll system.
Excellent. Thanks, Wing. So yeah, just a really open system that really wants to integrate with other systems. They've made it very easy. And I know there are ways to customize integrations too. So if there's a platform that they don't integrate with Adaptive Insights, doesn't integrate with natively, perhaps there's a solution through APIs or programmatically to do it as well.
Right, and that's, I'm going to just piggyback on that. What we have in the solution, and I failed to show that, but that's okay. What we have in the solution is an integration framework where if you are cloud to cloud, if you are a specific ERP system or an HRIS system, we have the framework to get to the data. So currently, I believe we have over 250 different applications that we've connected to with our 4,200 customers. So really the rule of thumb is if you can get out the data, we can get it into Adaptive.
Eric, that actually leads us into our next question. We're being asked in the Q&A, a customer has very complex Excel models. How difficult would it be to bring that type of data into Adaptive Insights?
So there's a couple of ways that you can bring that into Adaptive. Adaptive does have an Excel interface for planning. So if you wanted to keep that very complex Excel model untouched, which some people, that's their bread and butter model, spent years creating it, and they want to just put the output of the model in Adaptive. With our Excel interface for planning, you can link that into an input sheet, if you will, and load it directly from Excel into the web, into the cloud application. The audit trail works on either if you're making changes in Excel or if you're making them in the browser, you have that ability and it will keep an audit trail of those changes. So many of our customers actually start with some of the aspects of the model in Adaptive, and then over time they'll bring more of those complex models in the same framework of Adaptive just so that everything is in one place. But we also recognize that there might be a use case where somebody wants to keep their Excel model the way it is and just take the output and load it into Adaptive. You can do that very quickly and easily.
Yeah, I love how the it's almost like a global undo button, right? That audit trail that allows you to go back in time and see exactly what's been happening with the data, who has been manipulating it, and maybe if there was a mistake made, how we can go back and fix it, right?
That's correct. Yep.
David, a question for you. This is about dashboards. You spoke about that earlier. What's the best way to leverage dashboards, and how do they help with planning?
Excellent question. Thank you very much for asking. So dashboards are a great way to identify for each individual team member in your organization key metrics that might be used for their specific needs or workload. So as I mentioned earlier, if you have a physician, he might be concerned with the number of procedures that he's doing. If you have a receptionist, they might be maybe most concerned with the number of phone calls they're placing, schedule appointments that they're maybe making, phone calls they're answering, emails they might be sending. If you have someone in the nursing facility, they may be addressing the number of customer interactions. And using that metrics against maybe the budgets that you've forecast and what is reasonable in designing your budgets, what do you think is reasonable for each of those individuals, and then letting them see this information either daily, weekly, monthly, is a key way for them to continue to see whether they're performing as they're expected to perform. And then including those performance variables as part of their compensation would be a great way to also incentivize those individuals to exceed your expectations and either meet or exceed your forecasts.
So, David, what I'm hearing is that Adaptive as a platform is not just for the finance team, but it's a tool for managers, it's a tool for department heads, anybody that needs to sort of track the progress of their department within an organization and how it's measuring up against goals, right?
That's exactly right. And we did get into the concepts of what Adaptive Insights calls active planning, but I urge you, if you're on this session, to learn a little bit about static and active planning. And the concept of active planning really encourages the organizations to roll the application out to the entire organization and allow them to look at their metrics for their organization and perform against those metrics.
David, I think we're going to have to invite Wing and Eric back for our next webinar and make that our topic. How about that?
Sounds great.
All right. Well, we've gone a little bit over the hour here. I want to thank everybody for bearing with us. This was a really fascinating webinar today. I know I've learned a lot, and I hope that you have as well. So on behalf of the CEO of Business Solution Partners, David Smooha, Wing Chen, our Senior Account Executive for the Adaptive Product, Eric Zimmerman from Adaptive Insights, and myself and my partner, Michelle Cronley, at the Marketing Department. Thank you for your attendance today. We're going to leave this last slide up here for you. Any questions that you might have around budgeting, forecasting, planning, or utilizing a corporate performance management system like Adaptive Insights for your business, and how Business Solution Partners can help you leverage that platform to get the most out of it, please give us a call, contact us, reach out to Wing, myself. I'll also say, look for this recording on YouTube, and go back in the slides and download the healthcare data sheet that we have in there. We'll also provide a link for it in our YouTube description. On behalf of Business Solution Partners, again, my name is Craig Cook, Chief Marketing Officer. Thanks for your attendance today, and we look forward to seeing you again soon.